I want to do something to increase the accuracy, the win rate of the Ichimoku Cloud method. What is the context of this video? So I've been looking at the comments on the previous videos, and some wrote to me, basically talking about some challenges you're facing, like keep running into those situations like the consolidations, the triangulating markets, and getting caught in few stages of unnecessary martingale. So you have been asking me on how can we make it safer? How can we cut out the unnecessary entries? And what I'm showing you on this screen is basically the answer to that. So quick introduction. Do we need the fractals? No, we don't. I just actually kept it there for whatever reasons. No, not necessary. But you do see that I put something in here as well. Yes, average directional index. And the average directional index comprises of three different lines. There's the positive line. Positive line means that there's more bullish energy than the bearish energy. And then there is the index line. The index line shows the average amount of movement. Okay, but other than that, notice that I also have two charts on the screen right now. And why is that? Because I can then compare. On the left, this is a 5 second. I can see the time frame over here. I know it looks a little bit, you see, like it's a little bit different layout. So to find the time frame, you have to click on here. This is 5 second, and on this side, this one here is on the 15 second. So one time frame higher. Yes, we are doing the MTF, multi-time frame. So this will help us to get a better idea of what is going on. So if it is dangling in the middle of nowhere over here, would we take a trade? Well, if it supports this, then perhaps yes. So this is still above the diagram, the span V. If there is a green over here and it comes out positive over here, I can consider to take it. At the same time, I can now also look, is there enough of movement? Now, the next thing that we are looking at over here as well is, it seems as though it's going to break out from the bottom. And if it comes out the bottom, what's that going to mean? The next consolidation over here would be inside of these bands. So could that be a case that once it breaks out, it gets stuck in this range and we get stuck with, you know, a few stages of martingale? Possible. Okay, now if this breaks out to the upside and then over here is still above the span B, can we take the trade? Well, actually that is a high probability, much higher probability. So in fact, that's what I'm going to prepare for right now. I'll wait for the close outside. I'm going to take a trade if it happens. If not, then I'll just look at the next setup. Okay, I'm looking at it, what's happening on the 15 seconds chart. But right now, okay, here, look at how it's progressing. Do you see? So this is how we can use the MTF, multiple time frame, to help us to analyze a trade opportunity. So what's going well for this? Both time frames is above the diagram, and also the index is strong. So we're almost at the end of this trade. We lost in the last seconds. So let's see how we can manage this trade next. So we want to make sure that it's really bottoming out. We want to avoid some price patterns that we don't want. There is a Kijun Sen over here, and that actually means we can possibly re-enter for another trade because it went in and it came out. Okay, so it went in, came out. I actually double clicked it, and then the Kijun Sen over here, the red line, is like a resistance line. So there are many times, and you can do this on the chart. I also want to give you guys one more trick on the charts that you're looking at. Okay, go on to the chart here, and then you can disable auto scroll. Is sickening as hell. Okay, and enable timer. So disable auto scroll, enable the timer. So this will help you. So disable this stupid auto scroll, and then okay, so here we are. This is cutting it very close, but I think we can get it. Why? Because we are actually on the upside of that line. Yes, that's good, that's good. So we have got this trade. So for today, this is, there you have it, one net win right now. Let's move on. Now, look what's happening right here at this point of time. So here we can take one more trade. Then this looks like it's gonna be triangulating on the 15 second, but on the 5 second, not yet. Okay, so we can see what's actually going on. And I want to paint a bit of a bad scenario. Okay, what if it goes out on the bottom side? On the bottom, if it goes on the bottom side, it may usually seem like a bad thing, but through this 15-second chart, we can see that we have a support area down here in the span A, span B as well. So this is like giving you a lot more clarity and an overview of the market. And in fact, if you want to take it even further, you can even go out to a 1 minute as well. But you know, I've been trying out this approach of 2 charts, 5 second, 15 second, and I find that this gives so much more confidence, so much more certainty when doing the trades, and overall, you know, it just feels so much more relaxing. Now we're on 2 net wins already. So what are the key aspects? And you notice that, okay, I've just been talking about the time frames alone. This is the key thing. What are we looking at? Once again, we're looking at a few things. We're looking at are they both on the same side of the span A, span B? Second, if it is above the span A on the 5 second, on the 15 second, even if you know, it did not come back into consolidate, but we can also use the Kijun Sen as a support resistance, knowing that, you know, when there is a uptrend, it goes in waves, and we can track those waves when it comes back to rest against the Kijun Sen. Now, we have not talked about the ADX very much until now, but once again, recap, we see that the bullish line is up, so the bullish line is the dominating trend, and we can see that up on both sides. And if there is going to be a direction change, we can actually look out for a cross down over here when the bears take over by moving up to the upside. So the bears have taken over here. Now, shall we trade the bears? Technically, can we? This one has not spent time inside yet, but maybe could have done it. Well, it depends. Again, would you be comfortable with this? That is a big movement, but at the same time, over here, if it breaks out to the downside as well, then that's very good. But I would say in general, we missed this. Why? Because it did not stop in this one. If it stopped inside here, I'll be much more confident to take it, but it did not. Okay, and this one over here, what's good about it is that it also broke out to the bottom side on the 15 second too. So that's actually a double confirmation. I want it to be both on the same side. Let's go to different pair, and we'll try to do the same thing once again. So we have it just come out of the bands over here, and I think it is okay to go in for a trade because over here we have some distance until the span A as well. Let's look at the line here. 15 is not really high, but the good thing about having a low number is that there can be a breakout. I always like it when it starts a bit low and then it breaks out to a very high amount. So every you know, trend starts with a consolidation, a low number first, and then it will grow as the thing breaks away, as the price action breaks away from the consolidation point. So our upside is, okay, this one it was not on the same side, but okay, take note that the span B, this is going to be our price ceiling. So after that, we already can get out of this trade, and we know that we have a very good margin, and on top of that, it's just broken through the top side as well. So if you can even hear this in the voice, this is a lot more conviction, and what I really want to help you to achieve here today is to help you to you know, gain a lot more confidence in your trading and to reduce martingales. So I hope this comes in a very timely way to help you to trade more accurately, so that those of you with smaller accounts, you know, you can actually have less things to worry about, and at the same time you can also trade with more confidence. And for those of you with bigger accounts or medium-sized accounts, you can scale more confidently as well. And as always, try this out on demo before going live, or let's say if you're going live, try with smaller amounts or whatever you're used to. Nothing crazy right now. Doesn't mean that we didn't really get into much martingale situations, means that you won't. So you want to train until you can do it in the way that you are totally confident. If you're feeling a little bit doubtful about your trading, need more practice. Reduce the amounts, practice more. If it's still giving you stress, maybe get on demo for a bit, get confident, and come back to trading with some amounts. But this, my friends, I hope it really helps you to get a more sense of grounding when you approach the markets. Okay,